Home Depot reports before the bell tomorrow with shares on pace for another losing year, down more than 8% since January as the home improvement market slows dramatically. And existing home sales in September just reached their lowest seasonally adjusted annualized rate in 13 years. Bank of America has a look at how that stalled turnover is impacting consumer spending on items like mattresses and furniture ahead of some other key retail reports this week. Here to discuss is Liz Suzuki, senior hardlines retail analyst at Bank of America. Liz, good to have you. Welcome.
Thanks, Kelly. Thanks for having me on.
I joked earlier, but we've pulled off the double Suzuki today, so I just want to mention that. We're all very excited. Listen, let me get right into it, and I'm going to start with mattresses and kind of save the Home Depot stuff for just a moment. But I was thinking back, Purple was once a $50 stock. It's, a 50-cent stock today. Casper had a bad IPO. It went private at a lower valuation. There's already been major fallout from, and that was even before the housing slowed dramatically. So where else should we be looking for shoes to drop across the home retail space?
Sure. I think what's been interesting about the analysis that you all have presented today, and you've been talking about the health of the U.S. consumer, and, it does still seem to be pretty much intact, and especially the U.S. homeowner is something that we've been focusing in on. And so these categories that are more tied to housing turnover and more sensitive to, the number of moves that we see in existing home sales, I think that that's something that we need to be a little bit more cautious about, especially in these big ticket items like mattresses and furniture and also flooring. These are, three big ticket categories that our analysis showed people who are moving spend significantly more than people who aren't. So mattresses, as you mentioned, people spend 6 times as much as non-movers when they're changing zip codes. Makes sense. You bought a house, now you're going to fill it. You probably have an extra room or two, and so you need an extra mattress, right? So spending there is a bit more sensitive to housing turnover. Same with furniture. It's about 4 times as much spending by movers versus non-movers, and high-end furniture even more sensitive there. So I think there are specific categories where we're still a little bit more cautious, and really those boil down to those higher ticket items.
And am I correct in seeing a company like Floor & Decor, which you would imagine would be right at the center of this storm, is still up about 10% year to date?
Yeah, exactly. Floor & Decor already reported their third quarter results. They saw same-store sales down 9%, which is, more than really what they've ever seen before in terms of downside. So I think that when we look at the broader home improvement retailers that have a wider variety of product and are not so niche and are not as focused on specific, housing turnover related categories, like, they still have paint, they have, broader maintenance products. We don't expect quite as severe a decline year over year for Home Depot and for Lowe's for that reason.
But I do see Best Buy, Whirlpool. Obviously, we know Whirlpool struggles have been well documented. These are some of the names that you haven't underperformed on, even Big Lots and Aaron's. Let me then kind of get to the grand conclusion here, which is what does this mean for Home Depot? The shares are down 8% right now. They are in the middle of some of these hard hit categories, but maybe there's other areas they can lean on now. I don't know.
Yeah, so when we looked at the home improvement category, we looked at building products and we looked at housing-related services. So these are, things that you would pay a professional to do for your home, a general contractor, a plumber, an electrician. Anytime someone's using their Bank of America credit card to pay those contractors and specialists, that's going into that professional housing-related services category. And so what we saw there was actually less sensitivity to housing turnover. We saw that movers spent about 1.5 times more than non-movers, and it's not quite as severe as like that 6 times for mattresses, right? So it was it's still a headwind, and we actually still think that it's going to be a headwind through most of 2024. But where we could see relief, and where our Bank of America economists are forecasting some of that relief coming, is both from new housing construction, which is still expected to increase, and also from the Fed cutting rates probably in the second half of next year. So that will help spur some housing turnover and get a little bit more movement going there, and that should probably spur the stocks as well.